We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up ADA/USD. We are on the 12-month time frame. Each candle represents 12 months. So we do have price action overall, higher high of structure, which would be the highest body structure, which would be the second last candle in the market. And we are looking for price action structure in that area, which would be with current price currently moving. Now we're looking for the midpoint, followed up with second level highs and second level lows. So current price is sitting at 0.282585. Price action bearish red candle. So price pushes up. It can tag the resistance line at 0.5978. And before tagging that area, it can tag the midpoint of 0.4402. And if price work its way down from this area, it'll be creating new lows, or as it look on this 12-month time frame. So taking a look at what happened with the market. So we on the 12-month time frame. We have two candles in the market. Price action candle, bearish red candle, long push down, no wick down to the bottom. So that market does have some momentum, unless we see otherwise in the lower time frame. Second last candles will spike up to the high. So what this market is reading is that the market did tag that resistance at the high and then worked its way down to that support at that low. So the way we think about it is we have an area of resistance. Think about the market having an area starting off at that low, pushing up through that high. So market identified that first leg and just came back for a retest for that opposite side. So we're going to see if that market's going to start trying to create a pattern in that area as we walk down the time frame. Second last candle also identified it lost a lot of momentum in that market. So when that market did push up, eventually it was a bullish green candle pushing up, lost momentum, came down as a red candle, closed out here, lost a lot of momentum to the top side, which drew that market down. Second last candle is a retest of the price action candle wick is a retest of that second last candle. So we can see in that area when that market did spike up, it did lose momentum to come down. Then the next candle formed, spiked up at that high, tagging that left side of that second last candle to push down. So it's a break and retest in that area. Walking down to the 6-month time frame. So 6-month time frame, price action, bearish red candle, very small. I mean, it's not a size, it's not a doji, but it's in that doji family because it's a very small, non-dominant candle. So now we got to figure out what's happening in that area. We can see that price action is working its way slightly side to side within that second last candle, but had a little bit of momentum to push down. But we could be losing momentum for a reversal unless that bearish candle is still active. We see it is an active candle. We'll see if that candle is going to push down with some momentum. But take a look at what happened in the market. Above that price action at that high, we did receive multiple patterns. We received market spiked up once, market spiked up twice. So we have a double top. Second last candle is a retest and the market pushed down. That high is reading as a double top and retest. Market came down from an area. We're going to see if that market is consolidating at that low, is always trying to work its way up, or is it going to break that support line that we created and create new lows. Headed down to a 3-month time frame. So head down to a 3-month time frame. Above price, we do see that double top. We'll talk about it. We have 2 touches to that top. If we think about green candles coming up to this area from a low, we'll identify it as that first, second, third, fourth to last candle is a retest and the market pushed down. So we clearly see that double top and retest. Market came down. So let's take a look at what's going on at the 3-month time frame with the bearish red candle side by side with the second last candle being a retest, a doji, or a push-up candle similar to a doji. So The third last candle pushed up, second last candle came back to retest, price action pushing down, still trying to break. So it's a break and retest happening in that area on the 3-month time frame, headed down to the 1 month. Just receiving bearish red candles. Now we can see that break and retest. That break and retest did happen at second level lows. So market broke, came back to retest, and then pushed down to that area of support. So if a pattern's trying to form, we'd be able to see some type of first, second, third markets work its way up, or we may receive that consolidation or a break and retest if that market works its way down. Headed down to the weekly time frame. Price action weekly time frame reading as a bearish red doji. So we're receiving consolidation. Price in second, working its way sideways. Let's zoom into price. So we can see that the third to last candle pushed down, the market is consolidated. And we can see the levels that when the market did push down, it broke. So we have a break, retest, push. And now we look for that break. If it happens, the retest to see if that market's gonna push down further. If not, a pattern can be forming in this area to push, eventually push back up to the next previous retest. Headed down to the daily. On a daily time frame, stretching out the market. Market's consolidating from that weekly time frame. It's the last 12 candles in the market, just about. It is a pattern that could be forming. So let's talk about it. We can see that that market, if this market pushes up, it can be coming from these tags at the bottom. Coming down in red is a first, second, third, fourth double top, multiple retests, and the market is going to see if it's going to push out that area from that double bottom and the retest. There's a lot of patterns in here. So there's another pattern of a head and shoulders pattern. We'll talk about that on the, it won't look too well on the 4-hour time frame. So we'll go back to the daily and draw it out. So we can see that left shoulder, we see that head, and we can see that right shoulder that's trying to form, see if it's going to break out. If not, market would be pushing down further from that resistance. And we'll talk about that on the 4-hour time frame. Bearish red candle 4-hour time frame. If price pushed down from this area, where is it coming from? So it could be multiple pushes to that high, as we can see. So we have the market broke, retest. We have that first, second, third. Market came back to that midpoint of that area. So it's retesting. So if it pushes up, you'll see that W formation. If not, you'll see that first, second, third market comes through for that double top, break and retest. So if once it starts breaking and retesting in this area, it's entered our zone. So let's create our zone on the 4-hour time frame. So we're going a little bit above the SR line, a little bit below. And let's take a look at what's going on. So we can see that price is outside of the zone. It did spike into that zone, create that pattern, broke out, retested multiple times, came back for a retest again. We're gonna see if it's gonna push up in green. If not, it's gonna enter our zone again, and we're gonna look see what's gonna happen. 3-hour time frame, talking about a bearish red candle being a retest, first, second, third, spike that low. So it's on the third leg. 2-hour time frame, same as well, first, second, third, spike that support. 1-hour time frame, bearish red candle, same as well. 45-minute time frame, starting to receive that consolidation. So what's happened is that, I mean, it's been overall consolidation, but it's identified that first, second, third, and market's trying to push up out of that, but made it to the midpoint. So it's still at least a quarter into the third leg to that fourth leg of a W, somewhere in this area of that W currently. Headed down to 30. We're seeing that bearish red candle. So price action, long wick up to the top, second last long wick to the bottom. This is identified as an overall doji. May see a large doji as we walk down the time frame, may not. And that's why we see that consolidation that we are in. Headed down to the 5, patterns trying to form. Still reading the same area, hanging out that midpoint. 3-minute time frame, same as well. You can see that W formation that's trying to form, or it may drop down for a double top. First, second, third, fourth, retest, one, retest. Came back here to the midpoint, see if it's going to push up. Okay, guys, very important information. Please review and study Forex pattern cheat sheet, breakout and retest strategy. Click on images. Okay, guys, this is Cam Jones, FX, ADA, USD.